Daily Fiscal Pulse for the 6th of August, 2026. We're looking back one trading day, examining how money moved through the close on Thursday. Before we dive into the numbers, let's acknowledge what's capturing investor attention. The story of the moment centers on artificial intelligence and technology. IBM's earnings beat and Chesky's commitment to significantly increase AI spending pushed the stock up 15%, and that momentum is rippling through market sentiment. With that context set, we can turn to what the actual fiscal data is telling us. Looking at the transfers themselves, we landed at $8.9 billion for the day. Tax receipts were the main driver here, pulling in $4.5 billion. On face value, there's nothing that stands out as particularly noteworthy. What's striking is price strength against a fiscal headwind. E-mini S&P futures closed at 7,735, sitting comfortably above the 20-day moving average of 7,553. That moving average sits inside a 474-point range over the past 20 days. The market is holding its ground even with softer fiscal support underneath. Look at the spending trajectory on shorter timeframes and a picture emerges. The 5-day average for government spending sits at $27.8 billion daily. Zoom out to 20 days and it's $9.5 billion per day. That gap means more cash is flowing into household hands and eventually filtering into asset prices. Pulling back the lens to year-to-date comparisons shows consistency in the trend. Fiscal year-to-date spending totals $1,464.2 billion, down about 12% from the same window last year. Less fiscal support matters when you're thinking about overall market liquidity. The fiscal backdrop isn't providing a clear directional bias right now. Our conditions gauge reads -20, but history gives us some perspective here. We've encountered this scenario repeatedly, and even with tighter liquidity conditions, the S&P has typically managed around plus 0.8% over the next month. Markets don't move in lockstep with liquidity flows. They find reasons to grind higher. On positioning, margin debt is sitting at the 100th percentile, which is elevated. Historically, when we've seen levels like that, they've functioned more as a caution than a buy signal. 2 dates to watch. The 12th of August is the SSA payment cycle hitting on the second Wednesday, which will shift near-term flows. Treasury coupon interest payments have a major window opening around the 15th of August. We don't have a strong fiscal signal pushing in either direction at this moment. Upcoming scheduled flows will be what determines if that changes. That's our position heading into Friday.